Good morning, everyone, and happy Wednesday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back and thank you all so much for being here. This morning we'll be taking a look at a bunch of exciting stock market news, notable earnings reports, and which stocks are the morning's biggest gainers and losers. By popular demand, the TipRanks mobile app now offers light mode. You can access this by heading over to your menu, going down to settings, and toggling between dark and light mode. So go on and give it a try yourself on the TipRanks mobile app. Links will be in the description down below. Now let's get right into this morning's exciting stock market news. U.S. stock futures are currently in the red this morning. Right now, Dow futures are down 0.41%, S&P 500 futures down 0.37%, and NASDAQ futures down 0.35%. It's been reported that Taiwan Semiconductor is planning another multi-billion-dollar investment for a new factory in Arizona. The Wall Street Journal reported that the company plans to build an advanced semiconductor plant north of Phoenix with an investment estimated to be roughly similar to the $12 billion it committed a couple of years ago. It added that the facility would manufacture the 3-nanometer transistors, with an official announcement to be made in the coming months. Analysts currently rate their stock a strong buy with an average upside of 43%. They also reported that Netflix is quite interested in streaming sports on their platform. This comes as multiple streaming giants are increasingly looking to gain access to sporting events to make their platforms more attractive. Recently, Netflix bid for the ATP Tennis Tour's streaming rights for some European countries and also contemplated bidding for other sporting events, including the UK rights to the Women's Tennis Association and cycling competitions. Analysts currently rate the Netflix stock a moderate buy with an average upside of nearly 8%. It is now confirmed that Meta Platforms plans on laying off 11,000 jobs, which is about 13% of their total workforce. CEO Mark Zuckerberg said that today I'm sharing some of the most difficult changes we've made in Meta's history. I've decided to reduce the size of our team by about 13% and let go more than 11,000 of our talented employees. We're also taking a number of additional steps to become a leaner and more efficient company by cutting discretionary spending and extending our hiring freeze through Q1. Analysts currently rate the Meta Platform stock a moderate buy with an average upside of 52%, with some very differing price targets coming in the last couple of days. After reporting a decline in vehicle reservations, Lucid Motors also announced a $600 million at-the-market program and up to a $915 million additional investment by AR Third Investment. The at-the-market program is essentially a securities offering at the current market prices. IR Third Investment is a majority shareholder of Lucid's and will buy up to $950 million worth of shares in one or more private placements through March 31st. They said that they intend to use the net proceeds from their at-the-market program and these private placements for general corporate purposes. The stock is currently down 8% after they also reported a wider than expected loss of 40 cents per share on sales of $195 million. Analysts currently rate their stock a hold with an average upside of 39%, most recent ratings coming in with a downside. And Elon Musk sold an additional 19.5 million shares of Tesla, bringing his stake down to 14%. A regulatory filing revealed that Elon Musk sold about $4 billion worth of the company's shares. This brings the total amount sold by him this past year to $19 billion. This comes after he announced earlier this year that he had no plans to sell any more shares of the Tesla stock. Analysts currently rate the Tesla stock a moderate buy with an average upside of 57%. Now moving over to notable earnings reports. In the pre-market this morning, we'll be hearing from Roblox, Canopy Growth, and Fiverr International. And in the after hours, we'll be hearing from Beyond Meat, Rivian Automotive, Digital Turbine, Unity, and Bumble. Already in the pre-market this morning, we heard from the Trade Desk, who posted upbeat results for their third quarter. They reported a Q3 earnings per share of 26 cents, coming in 3 cents ahead of analyst expectations. Revenue came in at $394.77 million, which was up over 31% year over year and $8.24 million ahead of expectations. Analysts currently rate the Trade Desk stock a strong buy with an average upside of about 79%. We also heard from Wendy's. They posted mixed results but did reaffirm their 2022 earnings guidance. They reported revenue of $532.6 million. That was up over 13% year over year, but missed analyst expectations by over $6 million. Their earnings per share came in at 24 cents, which was 1 cent ahead of estimates. Analysts currently rate the Wendy's stock a moderate buy with an average upside of nearly 14%. In the after hours last night, we heard from Disney. Their stock is down 8% currently after missing on both earnings and revenue. Their Q4 earnings per share came in at 30 cents, which was 26 cents shy of analyst expectations. Revenue came in at $20.15 billion, which was up 8.7% year over year, but $1.29 billion shy of estimates. Analysts currently rate their stock a strong buy with an average upside of 43%. We also heard from AMC Entertainment. They posted their 12th loss in a row, but it did come in ahead of expectations. Their loss per share of 20 cents was 4 cents better than analyst estimates, while revenue of $968.4 million was up nearly 27% year over year and $7.43 million ahead of estimates. Nevertheless, analysts still do not love the stock as it currently comes in as a moderate sell with an average downside of 50%. And we heard from Warren Buffett's recent fave, Occidental Petroleum. They did slightly miss on earnings but beat on revenue. They reported earnings per share of $2.44, which was just 1 cent shy of analyst estimates, while revenue came in at $9.5 billion, which was up 39% year over year and $450 million ahead of estimates. Their stock is currently rated a moderate buy with a slight upside of 1.3%. Now let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by Array Technologies following their Q3 earnings report. Under the ticker ARRY, the stock is up over 18%. They're followed by Roivant Sciences under ROIV up 10.8% and Sprouts Farmers under SFM up over 8%. Our biggest losers this morning are led by GoodRx Holdings following their Q3 earnings. Under the ticker GDRX, the stock is down 11.6%. They're followed by News Corp under NWSA down 11% and Affirm Holdings under AFRM down 11.45%. So that is going to be everything for Wednesday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, don't forget to hit that thumbs up button and say good morning in the comments down below. I always appreciate hearing from you guys. Have a fantastic Wednesday. Thanks so much for watching, and I'll see you back here next time.